After the U.S. regulators pulled the plug on Silicon Valley Bank, Federal Deposit Insurance Corporation was called in to take over the institution and handle the sale of its assets. Employees of the fallen bank have been offered 45 days of employment at 1.5 times their previous salary. FDIC earlier wrote an employee retention mail. It said workers will be enrolled and given information about benefits soon. Healthcare details will be provided by the former parent company SVB Financial Group. California governor recently remarked everyone is working with FDIC to stabilize the situation as quickly as possible. Some businesses with holdings at the failed bank are already receiving offers from hedge funds. People are offering to buy their stranded deposits for as little as 60 cents on the dollar. Elon Musk earlier made a statement that he is open to the idea of buying the collapsed Silicon Valley Bank and turning it into a digital bank. In a surprise collapse on Friday, startup-focused lender SVB Financial Group became the greatest bank failure since the financial crisis of 2008, sending shockwaves through global markets and leaving billions of assets of businesses and investors stranded. The FDIC say that all insured depositors at Silicon Valley Bank will have full access to their insured savings as of Monday, 13th of March, at the latest. The bank's main headquarters and all of its branches will reopen on Monday, but the FDIC reported that as of the end of 2022, 89% of the bank's $175 billion in deposits were not insured. The abrupt failure of Silicon Valley Bank has shocked the startup community, which had grown to rely on the lender as a stable source of funding, especially for the most ambitious projects in the tech industry. It had become the 16th largest U.S. bank by assets in the year 2022. The bank had over $200 billion in assets and approximately $175 billion in deposits. The SVB collapse comes on the heels of the crypto-focused Silvergate Bank's shutdown. Silvergate marked the first U.S. bank casualty of FTX's collapse and the market rout that followed the news. Those woes were already reverberating across financial markets in addition to widespread worries about the Federal Reserve's plans for more and faster rate rises and plunging global stock prices. The bigger worry is not just the risk of contagion globally from the Silicon Valley Bank's collapse, but what the rising cost of money would do to other global banks. The rapid escalation of SVB's issues after the bank announced on Wednesday that it would raise money underscores how aggressive policy tightening by the Fed and other central banks to battle inflation is revealing weaknesses in the market. U.S. Treasury Secretary Janet Yellen earlier called SVB collapse a matter of concern. The White House, however, said that the banking system remains resilient and regulators have effective tools to address this type of incident.
Mentioned Silicon Valley Bank. There are recent developments that concern a few banks that I'm monitoring very carefully, and when banks experience financial losses, it is and should be a matter of concern.
Nearly half of U.S. technology and healthcare companies that received funding last year were SVB's customers. The bank also had connections with the leading tech companies like Shopify and ZipRecruiter. U.S. banks have lost over $100 billion in stock market value over the past 3 days, with some European banks losing another $50 billion in value. So SVB's fallout has raised fears that more banks might face the same fate against the backdrop of high inflation and the ever-rising interest rates. And for more on this, we are now being joined by Adel Nazarian, who is the CEO at the American Blockchain PAC or PAC. Adel, thank you very much for joining us at this hour. Do the employees or investors have faith in the Federal Deposit Insurance Corporation or the FDIC, or is this a matter of damage control, you think?
Hi, thank you so much. I think it's a combination of both. I mean, this is the largest collapse of a major bank since the 2008 financial crisis, of course, which led to Lehman Brothers failing. I think that, of course, for companies and individuals holding more than $250,000 in assets with SVB, Silicon Valley Bank, they can rely on the FDIC in order to take care of that. It's individuals and companies holding more than that are going to have to contact a special number, which I don't have memorized, of course, the FDIC, to see how they can arrange for that further. There's definitely a lot of concern, though, here, and a few interesting little tidbits of information that are also worth noting that I'm sure we can get into throughout the conversation.
Adele, Elon Musk says he's open to the idea of buying the collapsed Silicon Valley Bank and turning it into a digital bank. If it happens, what difference or impact will that have?
You know, I think that Elon Musk is excellent at getting headlines, and I think that he has fantastic ideas. That's definitely something that the government should look into, of course. And I have to say, you know, people are now trying to say that crypto and digital assets are, those who are naysayers actually are trying to demonize them when actually that's the future. So one thing I will note, the difference between the banking system that went under and a digital assets banking system, including crypto and blockchain, is that people are allowed to withdraw their crypto and money at any given time. The reason that this bank failed was something referred to as fractional reserve banking, which I'm not sure if the audience has heard of this, but if I may go into it a little bit, it was on March 15th of 2020 that the Board of Governors of the Federal Reserve System announced that they would change reserve requirements. Fractional banking, reserve banking, is a system that banks can only keep a fraction of their deposits on reserve and lend out the rest. What effectively happened on March 26, 2020, is that there would be a change to no reserve banking, which means, simply put, that banks could start doing whatever they wanted with all client deposits. And the difference is, from 2020 to 2021, Silicon Valley Bank had received large deposits, and they used these deposits to buy more assets using client funds. And so I think that if there was an opportunity for someone like Elon Musk to come in and to purchase SVB, it would probably tremendously benefit the system, honestly, considering his knowledge of blockchain technology. It would probably secure transactions further and prevent any sort of fractional reserve banking or anything that could result in a disaster such as what has occurred over the past few days for clients and companies.
Adele, finally, I know you wanted to mention this, but what are the demerits of this failure by SVB to the investors and also to American banks?
Well, while I don't see, this is a very eloquent question, thank you. I think that while I don't see this being exactly like the 2008 crisis, it's highly unlikely. There is pain coming, so to speak. And especially when it comes to bank stocks, right? They may take a big hit in the coming months. While this isn't likely to be a broadly systemic problem, Silicon Valley, of course, will be most heavily hit. And we're seeing reports coming out of other parts of the world, like in Europe, the UK, also those companies that had invested in Silicon Valley Bank will also be affected. But I think that the majority of regional banks are in better shape, considering SVB was more of an outlier. But those that have long held treasuries, for example, those that were purchased when interest rates were near zero, they may also be affected by it, because those bond prices and yields were inversely related, and there's a jump rate, which means that those assets are worth much less. So they also stand to lose quite a bit of assets. I think layoffs will definitely follow. People may have to sell off their assets and pay for day-to-day expenses, and asset prices will obviously drop. But I would say overall, the most important thing is for people to hold off from making any hasty decisions and to kind of stay put and just ensure they have some kind of, it's easier said than done, but have some kind of steady incoming flow of money, and not to make too many risky moves if they were heavily or somewhat invested in SVB. And trustfully, the government will be able to intervene. But I think if we can, as you said earlier, get someone like Elon Musk to intervene, it could be very, very beneficial. and hopefully everyone will be able to recover that was affected.
I've been talking to Adele Nazarian, who is the CEO at the American Blockchain PAC or PAC. Adele, thank you very much for giving us time today and for talking to us.
Thank you very much.